Picture this: you're ready to buy your dream car, move into a new apartment, or even apply for a job, and then, bam, your credit score gets in the way. In the US, that 3-digit number can open doors or slam them shut. As of February 2025, the average FICO score is 715, which is pretty good, but if you're below that, you might be stuck with high interest rates or flat-out rejections. The good news? You can raise your score fast, think 30 to 90 days, and save thousands while getting access to better loans and opportunities. This guide's for anyone who wants practical, no BS tips to make that happen, perfect for viewers looking to improve their credit. So, what exactly is a credit score? It's a number between 300 and 850 that reflects how well you manage your finances. The most common scoring model is FICO, which is used in about 90% of lending decisions. FICO looks at 5 factors: your payment history, which accounts for 35% of your score, how much you owe, making up 30%, how long you've had credit, contributing 15%, any new credit you've applied for, which is 10%, and the types of credit you have, also 10%. There's another model called Vantage Score, created by the 3 major credit bureaus, Equifax, Experian, and TransUnion, which puts a bit more emphasis on payment history at 40% and your credit usage at 20%. Both models pull information from your credit reports, which you can access for free every week at annualcreditreport.com, a benefit that became permanent after the COVID-19 pandemic. When I talk about fast credit improvement, I mean you can see changes in 1 to 3 months, as credit bureaus update their records monthly. There's no magic overnight solution, but with the right steps, you can make a serious impact. In this guide, we'll cover how credit scores work, what's new this year, 8 actionable strategies to boost your score, real-life examples, and pitfalls to avoid. Whether you're starting from scratch or recovering from a financial hiccup, let's get started. Your credit report is like a detailed diary of your financial life. It tracks every credit card, loan, payment, and even things like bankruptcies or liens. Unfortunately, nearly half of all credit reports contain errors, such as incorrect late payments or accounts that don't belong to you, which can unfairly lower your score. That's why it's crucial to check your reports every few months at annualcreditreport.com. It's free and takes just a few minutes. Your credit score takes all this information and boils it down into a single number. With the FICO model, a score between 670 and 739 is considered good, 800 or higher is excellent, and anything below 580 is poor, which can make getting loans or other financial products tough. To see quick improvements, focus on 2 major factors: paying your bills on time and keeping your credit card balances low. These 2 alone account for 65 to 70% of your score. You can find plenty of YouTube videos that break down how FICO and Vantage Score calculate your number if you want to learn more. The year brings some exciting changes to the credit scoring world, making it a perfect time to work on your score. The Consumer Financial Protection Bureau announced in January a new rule to remove most medical debts from credit reports. This change is expected to take effect by mid-2025, though legal challenges might delay it until July 28. Once implemented, it could erase $49 billion in medical bills from reports, potentially boosting scores for 15 million Americans by an average of 20 points. If you have medical debt dragging down your score, keep checking your reports to see when it's removed. Another big shift is coming in late 2025, when mortgage lenders will start using 2 new scoring models, FICO 10T and Vantage Score 4.0. These models analyze 2 years of your credit behavior, rewarding you for steadily paying down debt but penalizing you more if your balances keep growing. FICO 10T could shift scores by 20 points or more for 110 million people, with about half seeing gains and half facing drops. Vantage Score 4.0 is especially helpful for those new to credit, as it can generate a score with just 1 month of credit history and incorporates alternative data like rent and utility payments, potentially helping 26 million people who were previously unscorable. Tools like Experian Boost can add those bill payments to your report for a quick score increase. Lenders are also moving to a buy-merge system, where they'll pull data from just 2 credit bureaus instead of 3, which could lead to faster updates and fewer errors. There's also a minor change with the Truth in Lending Act threshold rising to $71,900, but this mostly affects larger loans and isn't a big deal for most people. These updates make this year an ideal time to take control of your credit. Let's jump into the first strategy: paying your bills on time. Your payment history is the biggest factor in your score, making up 35% for FICO and 40% for VantageScore. A single late payment, if it's more than 30 days overdue, can drop your score by 90 to 110 points and stay on your report for 7 years, though its impact fades over time. To boost your score quickly, make sure every bill, credit cards, loans, utilities, and rent is paid on time. Here's how to do it. First, set up autopay for at least the minimum payment on all your accounts. It's an easy way to avoid missing due dates, and most banks and creditors offer this option. If you prefer more control, use apps like Mint or your phone's calendar to send you reminders before bills are due. If you've missed a payment, call your creditor and ask for a goodwill adjustment. Many will remove a one-time late mark if you're usually reliable. You can find sample letters online to help make your case. Another great option is to use tools like Experian Boost or UltraFICO, which let you add utility and rent payments to your credit report, potentially increasing your score by 13 to 20 points in just a few weeks. These new payments show up on your report within about 30 days. For example, if your score is 620 because of a recent late payment, sticking to on-time payments could push it to 650 or even 670 in a month, according to estimates from Equifax. One person with a 580 score due to missed bills set up autopay and used Experian Boost, gaining 45 points in 2 months. This strategy starts working right away, doesn't cost you extra, and aligns perfectly with VantageScore's emphasis on payment history. The downside is that old late payments linger on your report for years, so you've got to stay consistent. The next big strategy is lowering your credit utilization, which is how much of your credit card limits you're using. This makes up 30% of your FICO score, and keeping it below 30%, or ideally 10%, can give your score a serious lift. High balances, even if you're paying on time, make you look risky to lenders. Here's how to tackle it. Start by paying down your credit card balances as much as you can. Focus on high-interest cards first to save money, which is called the avalanche method, or knock out small balances for quick wins, known as the snowball method. Make multiple payments each month, especially before your card's statement closing date, to lower the balance that gets reported to the credit bureaus. Check your card's closing date to get the timing right. If you've got a better job or a solid payment history, ask your card issuer for a higher credit limit, which lowers your utilization without opening new accounts. Most issuers let you request this online or over the phone. Don't close old cards, as that reduces your available credit and can spike your utilization. Just use them for small purchases and pay them off. Changes to your balances show up on your report in 30 to 45 days, and dropping from 70% to 20% utilization could add 40 to 100 points to your score, depending on where you start. For example, someone with a $5,000 balance on a $10,000 limit, which is 50% utilization, paid it down to $2,000 and saw a 35-point jump in one cycle. This strategy works quickly, doesn't require new accounts, and fits with FICO 10T's focus on debt trends, but you'll need cash to pay down debt, and asking for a limit increase might trigger a soft credit check. Errors on your credit report, like incorrect balances or accounts you didn't open, are surprisingly common and can drag your score down. Fixing them is a free way to get a quick win. Start by pulling your free reports from Equifax, Experian, and TransUnion at annualcreditreport.com. Look for mistakes, such as paid debts still listed as unpaid, wrong personal information, or accounts from identity theft. You can dispute errors online through each bureau's website, send a certified letter with proof like payment receipts, or use templates provided by the CFPB. The bureaus have 30 days to investigate. If you spot signs of identity theft, add a fraud alert or freeze your credit to protect yourself. Disputes are typically resolved within 30 days, and your score can increase right after. For instance, removing an incorrect collection account could add 50 or more points. One person disputed a misreported late payment and gained 80 points in 45 days. With this year medical debt removal rule, this strategy is especially powerful. It's free and can make a big difference, but it takes some effort, and not every dispute is successful. If you have little or no credit history, becoming an authorized user on someone else's credit card can give you a fast boost by borrowing their good credit habits. Ask a family member or friend with excellent credit, a long account history, low balances, and no late payments, to add you as an authorized user. Make sure the card issuer reports authorized user activity to the credit bureaus, which most do, like Chase or American Express. You'll get a card, but you don't need to use it. The primary cardholder's good history lifts your score. This can show up on your report in 1 to 2 months, often adding 20 to 50 points. For example, a young adult added to a parent's 20-year card with low balances saw a 60-point jump. This method is easy, requires no credit check, and works quickly, but if the primary cardholder misses payments, your score could take a hit, and some models like FICO 10T may not weigh it as heavily. For those with limited or damaged credit, secured credit cards and credit builder loans are excellent ways to build a positive history. With a secured card, you put down a deposit, typically $200 to $500, which becomes your credit limit. Use the card for small purchases and pay it off every month. Choose cards that report to all 3 bureaus, like Discover Secured. Credit builder loans, offered by companies like Self or Credit Strong, hold your payments in a savings account while reporting them as loan payments, and you get the money back at the end. You can track your progress with apps like Credit Karma. Reporting starts in 30 days, with significant gains in 3 to 6 months. Someone with no credit reached a 680 score in 6 months using a secured card. This builds your credit history and mix and works well with Vantage Score 4.0's inclusivity, but you'll need to put down a deposit, and some cards come with fees. Applying for new credit triggers hard inquiries, which can lower your score by 5 to 10 points each and stay on your report for up to 2 years. To protect your score, only apply for credit when you really need it, and use pre-qualification tools that don't affect your score to check your odds. For big loans like mortgages or car loans, complete all applications within a 14 to 45-day window so they count as a single inquiry. Check your reports for unauthorized inquiries and dispute them. Avoiding inquiries prevents those 5 to 10-point hits. One person who stopped applying after multiple rejections gained 25 points in 3 months. This strategy keeps your score safe and is easy to follow, but it might mean holding off on new credit for a while. Having a mix of credit types, like credit cards and loans, which accounts for 10% of your score, and keeping old accounts open, which contributes 15%, helps your score over time. Use old cards occasionally for small purchases and pay them off to keep them active. If you only have credit cards, a small personal loan can add variety, but only take one out if you can afford it. You don't need a ton of accounts, just a couple of each type. Keeping old accounts prevents immediate score drops, as closing a 10-year card could cost you 20 points, and the benefits grow over years. This strengthens your score long-term and avoids losses, but it's not a quick fix and requires some management. If you're behind on payments, debt sent to collections can devastate your score. Reach out to your creditor early and ask for a lower interest rate or a payment plan before things escalate. For accounts already in collections, offer to pay in exchange for removing the account from your report, though not all agencies agree. Always get agreements in writing to avoid issues. Settlements appear on your report in 30 days and can lift your score. One person cleared a collection and gained 70 points. This can remove negative marks and works relatively fast, but you might need to pay a lump sum up front, and not all creditors will cooperate. Here are some mistakes to steer clear of. First, don't skip checking your reports. Errors can sneak in and hurt your score. Second, avoid running up credit card balances, as high balances tank your score even if you pay on time. Third, stay away from payday loans. They don't help your credit and can trap you in debt. Fourth, Don't fall for shady companies promising instant credit fixes for big fees. Your own habits are what make the difference. Finally, with FICO 10T's new focus on payment trends, inconsistent balances hurt more, so keep your payments steady. Once you've boosted your score, here's how to keep it high. Stick to a budget using apps like Anab or Rocket Money to manage your spending. Monitor your score with free tools like Credit Karma or Experian to catch any changes. Maintain a balanced mix of credit cards and loans without overdoing it. If you need guidance, nonprofit credit counselors, like those from the National Foundation for Credit Counseling, can be a huge help. Aim for an 800 or higher score, which puts you in the top 20% of Americans. You can absolutely boost your credit score fast this year with the right steps. Pay your bills on time, cut down your credit card balances, fix errors on your report, and try tools like becoming an authorized user or getting a secured card. Limit new credit applications, keep a good mix of credit, and negotiate with creditors to clear up debts. With new rules like medical debt removal and the shift to FICO 10T and Vantage Score 4.0, you could see 50 to 100 or more points added to your score in just a few months. Stay consistent. Your credit is like a muscle that gets stronger with regular care. Check out below my YouTube playlist for more credit repair tips, hit subscribe for weekly updates, or leave a comment with your questions.